Guys, what is up, everybody? I do apologize for the inconvenience. I noticed that we sort of starting late there. Believe it or not, I've been talking to myself for the past 8 minutes, going over these slides that I put together for you all. Hit that like button to show me a little support that I'm not going crazy. I do apologize. I had a streaming on OBS. As we see, I'm streaming for over 7.5 minutes, and YouTube decided to tell me that I gotta press go live on YouTube's end as well. So again, guys, I do apologize for that inconvenience. We should be up and running now. Welcome to the Bullish Bears Saturday night webinar. We're going over trading strategies. We're going over the gap fill, which is the New York session close to the New York session open. We're going over the opening range breakout. That's the orb. That's the first 15-minute candle of the New York session high and low. We're going over the foundation of our trading, and that's going to be supply and demand. Guys, hello everyone. I do apologize about the inconvenience. Please hit that like button. Drop a comment. Somebody tell me that we're streaming and we're good to go. And then I'll get the ball rolling. Because, oh man. Yes, no, maybe so. I think so. We're getting more likes in here. Guys, let me know in the comments. Somebody drop a comment. Alright, so what are trading strategies? Oh, wait, did it really not start? No comments? Guys, are we there? All good? Okay, phew, come on now. Thank you, guys. Making me think I'm going crazy. Alright, so guys, what are trading strategies? Trading strategies give us a predefined set of rules to entering the market. When we have those predefined set of rules, we're no longer emotionally attached to our trading. And what do I mean by that? Because most people aren't really emotionally attached to the market. However, most people are emotionally attached to their accounts and their account size and to their trades. So when they enter a trade, if it starts going in the trail stop, like it starts going against their position, it's in the red, but it hasn't hit their stop loss, some people might get scared and just stop out immediately. We don't want to do that, guys. We want to respect our stop loss as much as we respect our take profit, because that's part of our predefined rules, right? And what also falls between in line with our predefined rules is how much we're risking per trade. Now, that's not what we'll be covering today. We'll be covering the opening range breakout, the gap fill, and supply and demand. Supply and demand is really the foundation of our trading system. That gives us an idea of if we're bullish or bearish, and also how to trade the orb and gap fill, right? If we're holding demand zones and we're moving higher, pre-market's been killing it, and we see that our gap fill is way down lower, and we understand we're creating good structure to the upside, then we understand that we should look to buy the dips, and we should not look for that gap fill to occur, because our supply and demand is telling us otherwise. Yo, guys, what's going on? Ozzy, good morning, good afternoon, good evening, guys. So some different types of trading strategies: supply and demand, and support and resistance. These are two very basic but very important systems to know. Support and resistance is just a general idea of where price has respected and reacted before. Supply and demand gets a little more specific on finding where those areas where there was a basing with some follow through in an opposite direction occur. We'll go over that in shortly. Buy side and sell side liquidity. These are areas where there's going to be what's considered liquidity in the market, which would be like a stop hunt. So let's say that we have a pre-market low sitting right above a demand zone. Well, then I would look for that breakdown to the downside where a lot of traders might take a short. I'm going to look for a long position because I'm looking for that demand zone to hold us back above. So what is market structure, guys? Market structure, along with supply and demand, this is the framework that organizes price movement for us. So this really tells us if we're long or short, if we're bullish or bearish. Once we're able to read this on a chart, whether it's a 4-hour time frame, a 15-minute time frame, a daily time frame, that's what gives us our direction. Now, what we want to make sure we're seeing is that our daily time frame is lining up with our lower time frame trends, because what could happen sometimes is our lower time frame, being the 5-minute or 15-minute, might look like they're trying to reverse. Meanwhile, our 1-hour, our 4-hour, our daily might be trying to move back in the opposite or the same as the higher time frame direction. So that's why it's important to have a top-down analysis into our trading. So let's get right into some supply and demand. I told you guys we're going to do some trading strategies today. I do apologize about the late start again. But we'll get the ball rolling. We are good to go. So supply and demand zones. What's a supply zone, guys? So a supply zone is an area where selling pressure outweighs buying, leading to price drops. Okay, leading to price drops formed by sharp moves down from a consolidation peak. So check out this image over here, guys. We have, this would be a supply zone because we have our green basing candle. Now the reason this would be our supply zone and what makes a supply zone is it's near a pivot high, like this one is right here. And what we look for is we look for a green candle because this is the last time that buyers had control in the market before we had a complete reversal from that direction. So even though we had, could you guys see my mouse? I don't think you can. Let me see. No, you should be able to. Maybe. Maybe. So sorry, Fritz, man. Sorry to keep you waiting. But we had our basing candle near a high. It was the green candle. So remember, guys, when we're looking at a basing candle like this, a small green body and a long upper wick, what that tells me is at some point that upper wick was a body. When this candle was forming, people were buying at these highs. Therefore, once this candle finally closed and sellers brought us back lower and the following candle opened and started to sell off, all of the traders that were buying at these highs end up having to stop out of their position, which forces them to then sell. That adds to the selling pressure that's already in the market that's pushing us lower. So 3 steps for a good zone, guys, would be the basing candle, would be our impulse move, and then I always look for continuation. So if we have our basing candle and an impulse move, but then we pull back to that zone, that wouldn't necessarily be a strong supply or demand zone. However, that's what an order block is. An order block is when we have our basing in a single impulse, and then we retrace and we hold. But a good supply and demand zone will have the impulse move and continuation. Now, a demand zone, guys, is just the inverse of that. It's an area where there were sellers trying to push us lower. We have a red candle with a long lower wick to the downside and a very strong move back to the upside. A lot of buyers ended up stepping in here while a lot of sellers were trapped. So the sellers are trying to force the market back lower at this point, trying to get out of their short position back in this area, which means they're trying to go back long there. So know the right time frame, guys. I'll cover this real briefly, then we will dive into the actual supply and demand aspect. Then we'll go into the opening range breakout and the gap fill too. So know the right time frame, very important. Why choosing the right time frame matters. It aligns your entries with the right market, its current structure and momentum. So if you're trading on a 5 and 15 minute time frame, but you're doing your analysis on a 4-hour and higher, well then maybe the lowest time frame you should go on should be 15. You shouldn't be looking at a 5-minute if you're trading off a 4-hour zone, right? Something like that. So like right over here, I have some examples for you. Lower time frame zones, like a 5-minute, which I don't mark out a 5-minute supply or demand. I only mark out a 15 and higher. We would look for confirmation on a micro market structure shift or liquidity sweep. Confirmations would be like a rejection with volume spikes. We always want to make sure our volume is aligned with our move. So that's all supply and demand. Here are a few more slides as well, sort of going over those time frame entries, but I do want to get a bit sooner on the charts for us, so we could go over the actual supply and demand and how to mark out these levels. Guys, what do you think? Do we skip over some of these slides and go right to the charts? All right, let's see. So orb, real quick, we'll only do a couple more slides and real quick. Orb, opening range breakout. Guys, the opening range breakout strategy focuses on price action during the opening of the New York session. So the futures market is open 23 hours a day and it closes from Friday into Sunday. So opening range breakout, we're looking at the New York session, 9:30 Eastern open, first 15-minute candle. Some people do use the 30-minute. I personally like to use the 15. We could also use the 5-minute as well. Right to the chart. Let's get it. All right, guys. Let's go right to the chart, and I'll explain it as we go. Fantastic. So first off, guys, I do want to mention this will not be like a technical analysis video today where I'm like, oh, okay, we're probably going to go bearish and head towards this zone down here, even though that's what I am thinking we're going to do. But this video is really going to be more on teaching you guys how to use these zones and these levels. So we're going to look at the ES right now, and right now I'm on the ESU contract. That way I don't have all my drawings from the other ES1 contract on TradingView. So the first thing I'm going to do, and I'll give you guys just a quick second in case anybody does want to bring up their charts and sort of chart along with me so you could see what I'm doing as well. But what I would do is we would start here on the daily time frame, and the first thing I do see is we had this rally right here, and this rally lasted, I believe this was 9 candles. 8 bars, 8 trading days, just consistent green. We went from, this was a Monday, all the way to the next Friday. So again, almost 2 whole trading weeks, and went up 360 points, 6% to the upside. This was after there was a economic event. So this is when the US bombed Iran over the weekend because of the whole Iran-Israel situation. People were expecting a major retaliation. Instead, markets did the complete opposite of that and gave us a real strong rally. So at this point, this would be my daily demand zone. And because price is currently trying to break, look at this here. We're trying to break our pivots. We're trying to make new lower lows now. So this was our last higher high. So we did just create a higher high, but now we're trying to create new lower lows. We're sweeping out other pivots. These are areas that held as support. So now that they're no longer support and we're trying to break through, we want to see if we can continue lower and head towards that 60.38 area. So now using supply and demand again, guys, we're going to break it down. We'll go to maybe a 4-hour time frame. See if we have any supply or demand zones down here that might help. I see a 4-hour right here, and we'll mark this out as a D 4-hour. This is because we have our basing candle, we have our rally, and we have our continuation. Now, I also see in the past that this green zone, now guys, it's important too that we are looking at the price action itself, but it's even more important that we're looking at the price levels themselves and how price is reacting each time we test into it. So as we see right here, this wouldn't be a supply or demand zone, but if we marked this out, it would be a great support and resistance zone. Because when price was below it, it worked as resistance. When price was above it, it worked as support. So again, going forward, this might be a good resistance area for shorts going into Monday. So we'll keep an eye on that area. And another good thing we can do, guys, because I just found a support and resistance area, is then I can come down to a lower time frame over here on the more recent price action and find a supply or demand zone. So we're on the 4-hour now, just sort of looking around, seeing if we see anything. We have a little bit of a basing candle right here. This was right at our Thursday market open, and then we had our sell-off. So we can mark this out as an area that price consolidated, so it could be a little bit of a supply zone for now. But the one thing that this zone is missing is it wasn't created at a major pivot. So it is an area where price pivoted, right? Because at this point, and I'll draw it out so you guys can visually see what I'm talking about. So we had our sell-off. This was pivot 1 to the downside. And then because this is a green candle, but it has a wick lower, that means price did move lower at some point, but moved back higher. Then it gave us our second leg. So this would technically be a pivot area. So this could be a possible supply zone for now, and this is on the 4-hour time frame. Then we're going to mark it down to some lower time frames and try to find some confluence within there. And again, we could also use the opening range breakout to see, okay, we're breaking to the upside first. I'll find a short position in supply and target the opening range break to the downside, because about 60% of the time we get a double break in the market. Yo, what's going on, Will? What's going on? Mr. Apple Bottom Jeans from Quant Data himself. Gotta throw the shout outs in there, man. Always good to have you. So 4-hour supply zone, great. Now what we do is we go down to a lower time frame. We check the 3-hour, see if there's anything else relative up there. 2-hour. And really just noticing and looking for the recent price action. So guys, note that when I'm marking out my supply and demand zones, I'm not looking over here, because at this point, price would have already broken these zones. If there was a supply zone here, it would have broke it over here. If there was one over here, it already broke it over there. So these would have been irrelevant zones that are already broken. So I would want to look for more recent price action to say, okay, well, where's our most relative zone I can find? Okay, this looks like a pretty solid one right here. This basing candle, so we're going to mark this out as well. This is another hourly supply zone now. And now I see that on our move lower that we've had, we haven't just been selling off, but we're creating good structure behind the sell-off. And what I mean by that is we're creating supply zones while we're selling off. If we were selling off and we weren't creating these areas of consolidation before we continued, then I would be a little hesitant on taking any shorts. But because we're breaking major areas of support, like we have right here. And guys, if you ever need help figuring out where are my areas of support, where are my areas of resistance, go to your hourly time frame, take out either the trend line tool or the horizontal ray. I personally recommend the trend line tool because that way when you mark it out, you could go from the candles, let's say you're looking at the pivot low, so you could click it, and then what you're going to do is you're going to hold shift and it's going to straighten out the line for you. Then you could drag across to the next area and then you could look to see how price reacted. Okay, in this area of support, we did reverse at some point. That's actually where we got this pivot. But then we came back down to it. We tried one more time. We got another pivot in there. We could see it a lot more clearly here on the 15-minute time frame where we rejected, pushed higher, came lower, pushed higher, and then we finally broke it. Now I have my new supply zone there. So guys, there's some confluence. This was a good area of support. Now it's an area of resistance, 63.59. This would be an area I would possibly look for a short position. So now here comes a great example of how I would use the opening range breakout tomorrow. So let's say the New York session, we open somewhere over here. Let's say this is our New York session high, and this is our New York session low. So we'll mark it out with our orb trend line, orb, 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 and now we say, okay, so this was our first candle, and again, we'll just sort of draw it out because we don't have that price action at the moment. I'm giving you guys sort of a trade setup before it even occurs, so make sure you hit that like button, guys. I do appreciate you. So let's say, there it is. So New York session, we move up, it opens over here, we wick around, we make a high, orb low, and then we look to see if we can break to the upside. At that point, once we start breaking to the upside, if we could find some selling pressure in here, I'll look to see if the lower time frame, like a 5 or 15 minute, could create either a basing candle on the 15 or a lower high on the 5 minute. And once we start creating that lower high and we get some type of volume confluence with this zone, we'll be able to take the short position and target the orb break down, because again, we have about a 60% chance of having a double break in the opening range breakout in the 15-minute time frame. So if we get a break to the upside first and we are able to find a good resistance point and we are in a bear trend, well then that's a great opportunity to find a sell position to target that orb double break to the downside. And that might also give you the opportunity to have multiple take profits, your first one being at that double break orb and your second one being at that next demand zone, because again, we're in a bearish market at this point. And again, I say that not super like, oh, we're crazy bearish. We were just creating all-time highs a few days ago, but with the recent news that came out, and again, I don't want to make this a geopolitical webinar, but with the recent news coming out that the past 2 job claims came through and they were spoofed and they were up 250,000 from what they really were, that's huge on the market. That's what this impact is right now. So the question is, does that impact want to pull us back towards this demand area, 60.38, and then support? Or is it strong enough to really give us a pivot back lower? Right now, our trend is our friend, and we have been bullish. So guys, even though we're pulling back intraday, we could always look at a higher time frame. Let's look at our weekly time frame. Weekly's pretty strong. It's a pretty bearish candle. That is a engulfing candle on the weekly. Now, something to note is look at all of our weekly time frames since April 7th. This is where our time frame analysis comes in, guys. So there are 16 candles here, and about only 5 of the 16 have been red. I guess 6 including last week. 6 of the 16, so over 60%, 70% of these weeks have been bullish. Again, we're in a bull market. We've been making new all-time highs the past couple weeks. Where is our continuation, or do we fail? So that would be a good example of how to use the opening range breakout if you're looking for a short position in a bear market like this. But another great way, another thing we can do, guys, is let's say this is our opening range again over here, right? That means now we do have our New York session close, because check this out, guys. So here's our opening range breakout, and we'll just close it there for a moment. But our New York session close from yesterday is going to come from, so we'll go to the 15-minute time frame. We're going to find our 3:45 candle. We don't want to go to our 4 o'clock candle because sometimes the 3:45 close into 4 o'clock could have a little gap of a couple points, so we want to be as accurate as possible. So we come to our 3:45 candle and we mark out the close. So because this is the 3:45 candle and it's a red candle, our close is going to be at the bottom of the body. Now we have our gap fill price. Now let's say again our orb is up here. We could use our orb along with our gap fill along with supply and demand to help find some confluence. So check it out. Let's say we have a breakdown first on the orb and volume increases to the downside. Well, then I could look for a retest back within the opening range breakout to take a short position to target the gap fill. Or at this point, this is a great example because we have a demand zone right underneath. Now, because supply and demand works as our core and our full structure, these are the zones that we want to anticipate and look for the most, right? So we don't want to look for a gap fill over a supply or demand zone. We want to look for a supply and demand before everything. So at this point, if we had our orb here, let's say we rejected lower, we had a low volume node, which would be a volume shelf on the volume profile, and we had our sell position, we could look for a short position. And it depends on where our entry is and how we took our entry. But if you're using the opening range breakout, you could have it at the top of the opening range because you're expecting a breakdown, not a double break. So you could then target the demand zone. And that's about a 2-to-1 risk to reward. Now, me personally, guys, what I would do at this point when trading the opening range breakout is if I am taking a short position, trying to break to the bottom of this range, I'm not going to be putting my stop loss at the very high. I want to put my stop loss where my analysis is incorrect, which would normally be at this high. But at this point, if markets did start to reverse, and we got some type of move where we tried to sell off, volume failed, and then we go back higher, well, then I'm fine with taking that stop out, seeing that we're going to be range bound, right? But if we're going to continue to the downside, then I want to be in my position and I want to have my targets prepared. So that would be one great way to use the opening range breakout for a breakdown, targeting the gap fill, which aligns with a demand zone. Now, if you guys want, we could also go over gold to give you guys another perspective. Guys, what is going on? Hope you're all doing well. Don't forget, join our community at bullishbears.com. I go live Monday through Friday. Do pre-market 8:30 to about 11. Do some live trading. It's pretty lit, guys. Pretty cool. So let's go over to gold, and we just want to sort of look around. So gold, I'm on the Z contract. That is the expiration of December because we just had our contracts rollover. And I'm just looking at gold, and the first thing that sticks out to me is how range-bound price has been, right? There has been a complete failure to find any direction. We're making lower highs, we're trying to make higher lows, price is really squeezing here on gold, and this could really be leading up to something huge in the geopolitical or in the economy, because we know that price action doesn't move markets. However, the economy, volume, geopolitical indifferences, any type of trade tensions, these do move markets. So I'm going to be looking to see gold. So because we're squeezing here and I'm not a trend line trader, I'm a pivot and price action trader, and we look for our volume and price levels. I'm going to mark out our recent high. I'm going to mark out our recent low. And I'm going to look for those two price levels to either hold or fail. Now, once we do start failing one of those levels or breaking one of those levels, I need to see volume here on the daily time frame, because that's the time frame I'm doing my analysis, to increase on the breakout. If we get a breakout and our volume is very dull, then there's a great chance that we're not going anywhere. So check this out right here, guys. On gold, we sold off pretty hard over here, but then volume started to pick up. Once we found our bottom, we started to pull back. So we are range bound. Gold is in a very consolidated point right now. I wouldn't really look for longs or shorts at this position, but remember, we're on a daily time frame, so we can knock it down to like a 4-hour, a 3-hour, and look to see where our structure lies. So let's mark it down to a 4-hour time frame. See if we have any areas, any points of control, any points of interest, supply, or demand. So I'm not seeing anything really on the 4-hour. Come down to a 3-hour. And the first areas I look at, guys, when I'm going through my zones and I'm going through my time frame analysis, my eyes are instantly drawn to the major highs and major lows. That would be something like a major high right here, a major low over here, a major low over here. Again, it wouldn't be these in between because I see that those were already broken, so those are irrelevant to me. So I'd be looking to see if, okay, is there any supply or demand zones over here? Go from the 4 hour, go to the 3 hour. Okay, look at this. Right over here we have a 3 hour demand zone. So we're going to mark this out with our green area. Mark it as our demand. And we're going to do 3 hours. So D 3 hour. Alright, so perfect. So now we come down to a 2 hour, and I see that this 3 hour demand is held as support. So that's great. So now we have our area of support. Now we can look for our area of resistance to hold us within this range on gold. If we don't really have any resistance, then I might be looking for us to continue higher. So I see a very small area where price consolidated right over here. Now I'm not talking about this specific candle. This specific candle does look like a supply zone. It has our green basing. It has a pretty strong move to the downside. But look at how small this zone is. Very small. Look how much larger these zones are. So we want to be realistic with the market and realistic with our zones. So what I would like to see is if we have an area that we consolidated in this whole range. Now, if I'm looking at this whole range and this is the 2 hour, then I'm going to assume there's going to be something on a 3 hour, maybe a 4 hour, possibly a 6 hour. And if we do have to go even higher, sometimes even the 8 hour time frame. So we can mark this out as our supply zone here on the 8 hour. Now, a lot of people in here, if you are part of the community, 8 hour time frame is not a time frame that I check periodically or often. But if we are doing our analysis like this, we do have to make sure that we're dotting our I's and crossing our T's. So let's mark this out as our supply zone. And this is going to be a S. So because it's an 8 hour, oh, I do have an 8 hour saved. Fantastic. I think I just got to change the text to a little bit lighter. Great. Save template, save as, S, 8 hour. Great. All right. So that would be my 8 hour supply zone. Now, something I want to mention, guys, is using supply and demand. We don't want to use it as, okay, I could only short. If it's a supply zone, I have to take it short. Yes and no, because it all depends on market structure, right? So if I'm looking at gold here, and it is making these lower lows, then yeah, supply zone short, that might be a good move. But if I'm looking at gold here and I see we're also trying to make higher lows and lower highs, well then I know that we're really more in a range-bound price action, and there's a better chance that we might break this zone if we do want to continue back towards these highs. So another way we could use a supply or demand zone, in this case a supply zone, would be to use it as demand. So once price breaks over this price level, that's when we could look to enter it. So we could look for a strong break above. What I mean by a strong break is not a few wicks on the 5 minute where we're barely breaking it and continuing back and chopping around, but a strong break like that zone's not even there. So what happens when we get a strong break or a strong move like that in the market is it creates an imbalance in volume, and when that imbalance occurs, that's when we could use that zone as a flip zone. So the supply zone with a volume imbalance in the middle of it, that volume imbalance would be our entry. Then we would target a new high of day or the next area of supply or demand. And what's great with those low volume node entries overlapping a broken zone is they usually give us a really clean and a really pinpoint entry. So we'll see. We'll keep an eye on that on gold. Again, this is just some technical analysis using supply and demand. And then I would come down to, let's say, a 30 minute. And let's just say for right now, New York session is about to open. Can't really use, we could use the gap fill on gold. It's not as easily filled as we would see on something like something, let's see, I'm looking for right now Edgeful. Let's show you guys. Guys, give me a second. I'm just gonna pull up Edgeful. So guys, Edgeful is a statistic-based platform, sort of one of a kind. Oh, what's going on, Edgeful? Okay, good, it is good. Very good, very good. So Edgeful is a one-of-a-kind market analysis sort of indicator, tool I should say, that gives us different reports based off of price action. So we could look at the gap fill, fair value gaps, inside bars, gap fill, opening stats, orb opening range breakout, power hour breakout. There's so many different reports we could look at on here. Fantastic tool. I'll be sure to put the link in the bio so you guys could check that out as well. I think you get like a 10% or 20% discount with the Bullish Bears coupon code, so make sure you use that. But here is the gap fill. This gap fill on ES, and it lets us sort it by what session. So we're looking at the New York session. What size, so we can look at standard, we can look at what size the gap fill is, and we could also look at by weekday. We could also look at by close, by spike, and by fill time. The only other few I would recommend is standard, by size, by weekday, and possibly by fill time as well, because what we want to look for on the gap fill is we want to see that gap fill occur within that first hour of the market open. If it doesn't, there's a much better chance that we don't fill the gap. But again, we could also check, here's our opening range breakout. I want to show you guys that, the orb, is what we'll see is a very high probability of a double break, and that's sort of where we get our bias with the orb. So if we see that on the ES, the New York session, we have a 55% chance of a double break, and right now I'm looking at the past 5 days, we've had either a double break or a breakdown. That gives me a bearish bias. So if we get a break out to the upside, you guys remember the setup I just showed you before on ES. So ES, if we get that break to the upside first, let's see. Let's say ES breaks to the upside first, like this, and then starts to pull back. I'll look for a short position on the pullback, right, on that low volume area. Let's say we create a bearish fair value gap or something that gives us our entry. Then I'll take the short position off of the supply rejection and look to target the orb breakdown and the gap fill. Again, that would be the bearish confluence from the from the orb, I should say. Past 5 days, we've either had a double break or a breakdown. So again, that tells me we've either had 2 breaks, which if we broke one side first, I should definitely be looking for a double break, especially if we break to the upside. Because the only time we didn't have a double break is when we had breakdowns. So if we have a break to the downside first on Monday, then guess what? I might not look for us to return back to that orb high. We might look for continuation lower on Monday. It's really going to depend. We'll have to see, we'll line up our zones, and we'll be patient, right? Whenever it comes to trading, it's super important to understand patience is key. So this is ES, this is gold. Did a little bit of analysis on both of them. Guys, I want you to drop any questions you might have in the chat, whether it's about supply and demand, support and resistance, the gap fill, the opening range breakout. What I'll do right now, guys, is I'll give you a little bit of an example of how I do my pre-market prep, right? My pre-market routine every morning, every day. Let's see. Oh, first, actually, I'm glad I kept these here. I'm going to show you guys some other examples of the orb. So this was one of our breakdown days right here. So here on our breakdown, right over here. So here's a great example of using the VWAP along with the orb for confluence. So look at how price opened. Let's put our replay system on. So this was price open. We wicked, we traded around, we chopped around for a while, but at this point, we kept failing to break out of the orb to the downside, right? Not failing to break out of it, but failing to hold back in it, right? So look, another candle forms, and we see that we keep rejecting it. We keep failing to close within it. We keep finding volume to bring us higher. So we keep failing to find volume to bring us higher. So we could look for a short position below VWAP and use VWAP as the confluence too and say, okay, we keep failing to close above VWAP. We keep failing to close back within our opening range breakout. I could look for a previous day low now as a target for my short position. Let that play out. As we saw before, this trade does end up playing in our favor. It was only about a 24-point move on the ES, guys. This is not something that's super extraordinary, like, oh my god, this is the best trade in the world, but look at the risk to reward on it. Even if we, and that's using the midpoint of the orb, the opening range breakout. So pretty interesting, really good stuff, great strategy to use, and previous day highs and lows are great targets, especially if we don't have any like supply or demand zones to target, right? So my 2 main areas that I always watch every day, supply and demand, previous day high and previous day low. What's great with the orb and the gap fill is these are new prices every single day, right? So it's giving us new price levels to watch to give us some type of direction. The next day I want to show you guys, we'll let it play out for a moment, see how quick we can let it play out. No, forget that. Yeah, I was trying to let it play out till over here. because I want to show you guys the example. This was a long position we took in our trading community, guys, at Bullish Bears. You guys feel free to join at bullishbears.com. We have monthly, yearly, and lifetime memberships. If you get the lifetime membership, though, you do get access to our what's it called? Our next level library. That's where my futures masterclass is located. All right, so here we go. So right here, good. That was a perfect pause. This is where my long entry was, right? So guys, let me break down this entry for you. This was using the opening range breakout. So these yellow levels, this was our 15-minute high and 15-minute low. It looks like it's just the 5-minute high and low right now. But remember, the 15-minute close is at that 9:45. So 9:40 is our last candle of our 15. And our 9:35 and 9:40 both failed to break that first 5-minute high or low. So at this point, we got our breakout at 9:45. So that tells me, okay, we already got our breakout. So once price started to return, and it was literally, look how close we were, guys. We were, what, one tick away? One tick away from hitting that double break. Once we started holding that, and I saw price was holding a very strong level of 64.06, I was using Bookmap as my volume analysis tool, an order flow tool, and I spotted a very aggressive buyer who was absorbing all of the sellers down here. With that being said, I was able to take a long position near the lows and use the orb as my stop loss because I was expecting us to continue our breakout back higher again. Even though we failed to close above it, we were also failing to break back lower. So that's another way we could use the orb as sort of an area to say, okay, I'm going to take my longs within the orb, stop loss at the low because we haven't broken it yet, and I don't think we're going to, right? And it happens. We see there are days on the orb that we don't fill the gap, right? Or that we don't have a double break. There are breakdown days. There are breakout days. So with that being said, we got to be prepared for trading both of them. And we could also use the gap fill here too. Even though our gap fill, check this out, guys. We're on the 5-minute time frame right now, so we go to our 355 candle, 355 close. I remember this now. That's so funny. Our gap fill price was working as support, and that's something I really recognize too also on this trade setup. So again, using different price levels, this was not a supply and demand trade. We were sort of range bound. Supply and demand gave me the bias that were range bound. Because of that, I was more than happy buying the lows of the range, selling the highs of the range. So because we were trading at the lows, we were holding this gap fill price level, I was able to take my long position, targeting the highs of the range. It was a very quick, don't want to call it an easy trade, but using the tools, using the confluences. Confluence basically means there are different reasons for your entry. Gap fill was working as support. Bottom of the opening range breakout was not broken yet, and the opening range breakout to the upside was broken, so we already had a single break at the moment. Remember, there's always an opportunity for a double break, but at that time there was only a single break. We were holding the orb lows, and we were also holding that gap fill price. Multiple confluences to give me the idea and the bias and the confidence to take that trade. Let's see, guys, what's going on, everybody? Again, any questions, please let me know. Just going over a few examples of the opening range breakout, the gap fill, and supply and demand. And guys, don't forget, join me on Monday. I will go live for free on YouTube. If you guys run that like button up from 8:30 to 11, we'll go over some live trades. And we'll see if this setup wants to play out, right? We'll see. I'm really curious to see where the S&P 500 and the NASDAQ want to open on Sunday. So it's important to see where they open on Monday too. But if we open on Sunday and we're like gapped below these supply zones, give me 1 second. So if we like gap lower and we open below this 6240 over here, like 6220 area on the futures market, then I'm going to look for this this demand zone right here that worked as support yesterday to work as resistance. So again, using supply and demand to find the tops and bottoms of my ranges just as basic support and resistance, and we'll also use that gap fill. So right now our gap is at 62.64. So at the moment, because we haven't broken this demand zone, I'll most likely look to see if we could fill the gap depending on where we open, and I'll look to target maybe this pivot high from yesterday, or we could also look to see if we have any new supply zones. So here's a supply zone right here on the ES. So I'm going to look for this supply zone right here We'll mark this out on a 15-minute time frame, so it's a 15-minute basing at a high, impulse move, and then we do have some continuation. So this could be a key area that I'm looking for. We'll mark that as S15. And again, this gives me an idea to say, okay, well, if we could fill that gap fill and possibly try to get back above it again, I could take my long position at the gap fill price, stop loss at whatever pivot low we just made inside the demand zone, and look to target the supply zone. Because again, look at this right here, guys. We're just looking for retracements back within this previous day's range. We are not looking for a huge move to the downside for 300 points, not looking for a huge move to the upside for 400 points. Just looking for this would be a 50-point move, stop loss of 10 points. Remember, we are on a 15-minute time frame now, and we do see that yesterday's New York session 15-minute time frame was able to give us a 67-point move to the downside. So looking for a 50-point move isn't that unrealistic because we just had that previous day. It's super important to look at previous day's price action because that could give us some expectations going into the next day, right? Are we expecting a trend like we had prior? Are we expecting a range? And what is that range? Okay, well, what was yesterday's range? Are we trading within it? Great, let's use that to our advantage. So yeah, great stuff, guys. Pretty good webinar. Any questions, please feel free. Feel like I haven't touched up on anything that you want me to cover, let me know as well. Pretty brief, this one was about 40 minutes. Again, any questions, please feel free to let me know. Join us at bullishbears.com. That's where we go live every day. We do one-on-one mentorships as well. You can get those at tradingpioneers.net. And yeah, really great stuff. I hope you guys were able to learn something from this webinar. The gap fill, the opening range breakout, supply and demand. These are great ways to find key levels. So supply and demand, again, gives us our foundation, our structure. We find these zones at night. We find these zones during the day. But these are higher time frame levels that stay for a while. Can we use quant data for scalping? Yeah, absolutely. I don't see why not. Our homie Apple Bottom Jeans, I don't know if he's still in here, but he's the quant data king, man. He's real cool. Love him. Great guy, real great tool, great company and everything. But all right, guys, any questions? Oh, what I was saying before. Supply and demand's your foundation. These are your 8++ zones and your 8+ entry areas. Gap fill and opening range breakout, these are our secondary. These are our confluences. These are the ones that we want to make sure we're stacking multiple with each other to give us confidence. A supply zone by itself might not have that much strength, but it has more strength than an opening range breakout by itself. A gap fill doesn't have much strength by itself, but if you line it up with an opening range breakout, then it will. I would like to understand the VWAP, how you use it, and how to set it up. Great question. We'll quickly cover the VWAP. So right here on my 15-minute chart, you see it's not visible. When I come to the 5-minute, it is. So what we're going to do is you're going to add it to your chart. You go over to indicators, do VWAP, and volume weighted average price. You add it. Once you add it, you want to make sure you turn off the band multiplier. We don't need that. You could also come to style. I have mine on blue. Visibility. I keep mine all checked off except for minutes. I have it from 1 to 6. So it's only visible on my 5-minute time frame because I only care about VWAP on the 5-minute. I don't care about it on the 15. Don't care about it on the 30. It messes up my chart if it's on higher time frames. As we see here, this was our New York session. This is weird. Look at this, guys. They got rid of one of my 5-minute candles. We see that we're trading below VWAP, and when we try to break above it, we push lower. VWAP would be a secondary confluence as well. So, like, check this out right here. We'll check this as 15-minute on ES. Here is our 15-minute orb. High, orb low, and this is Thursday. And then we come to our 5-minute time frame. And we see that, look at what lines up with our orb high. Our gap, our VWAP. So using VWAP and the break of this orb as our resistance point, this could have been another great sell opportunity, given the right order flows behind it as well. Put a stop loss maybe at a pivot high where our analysis would be incorrect. Pre-market VWAP level would be an okay spot, and look to target a new low of day. Because guess what? Right now, on this, if you were to take this trade, and we'll go on replay mode so you guys could visualize it a little better. Right now, pre-market, we're making we tried to make higher highs. But at this point, we started making a lower high, a lower high, a lower high, and we're also trying to make lower lows, another lower low. Now that we just recently made a lower low, and we just failed to make a higher high, we're making a new lower high. This would give us direction. Sorry I'm late. Did you get Marziti, you missed the secret, bro. Now I gotta start all over. Yo, the secret was I started this at 6 o'clock on the dot, but I was talking to myself for 8 minutes because YouTube didn't want to connect to OBS. Check this out, right? So using our opening range breakout high as a resistance, opening range breakout low did work as support for the time being, but general direction, due to market structure, that gave us our direction and our market sentiment to know, okay, instead of trying to go long on this pullback, let's try to go short with the direction of the market. Marziti, man, I'm sorry, but I'm right about to finish it up. Any last minute question, guys, you please let me know. Barely speak now. Long day, man, long day. But guys, we got a great week ahead of us. I'm definitely looking forward to what the markets have in store. So right now, real quick, briefly on let's go to our daily time frame. Tariffs on Canada and Mexico sent us flying to the downside, 10% off all-time highs. Tariffs on China sent us even lower, 22% to the downside. We had a tariff deal on all countries but China, sent us to the upside. China trade deal for a 90-day stay, that gave us another leg. Now at this point, you got it, guys. At this point, we're still waiting for those tariffs to come through in China. We're still waiting on that. We don't know if it's a trade deal again, if they're going to push it back another month or 3 months again. We're not sure. But markets are reacting to those jobless claims and to the job reports being spoofed like that, and they're really giving us a push lower. So something I would look for going into tomorrow would be if we could break, now that here's where previous day high and low come in play, guys. If we could hold below our previous day low tomorrow, I'm going to be a perma bear, they call it, right? Permanent bearish price action. I'm going to look to see if we can continue lower for another massive day like we had on Friday. So measured move wise, we were looking for this, possibly look for 61.45. Any demand zones down there? I don't see anything at the moment. Okay, I do see I have this over there. Check our 4 hour. And again, what we're doing is we're just sort of marking it down. We're checking for our zones and we're being prepared for tomorrow. Nope, I don't really see too much, guys. We'll end up marking that out. I'm sorry, not tomorrow, on Monday. So guys, make sure you hit that like and subscribe. If you're new here, join me on Mondays, Wednesdays, and Fridays here on the Bullish Bears YouTube. Make sure you turn on the bell so you get notified when I go live. That is, like I said, Mondays, usually Wednesdays, and definitely Fridays as well. But I go live Monday through Friday for our community. That's our Discord community. You could join it at bullishbears.com. All right, guys, have a great evening. Hit that like.